Hi folks, this is Mike Zlatnik, Big Mike, and this is an educational video talking about investing in real estate. It's a broad topic, so I'll try to cover as much as I can in very short time. I will omit some details, but you can learn more about that in the future videos or reaching out to us. So what is investing in real estate? Investing in real estate could be in two forms. One, you could be an equity investor in real estate. Basically, you can own real estate. You can own a single family house. The house you live in, that is an investment in real estate. The house that you buy to rent to someone else. It could be a single family, it could be a duplex, a triplex, a quad, or it can be a commercial deal like a multifamily deal, a self-storage, a shopping plaza, an industrial, and so on and so forth. You could be an equity investor, effectively an owner. An alternative to that would be you could be a lender. You could loan the money on a deal that is owned by somebody else. So you could either be a lender investor or you could be an equity investor. There's a few different ways to invest in real estate. So you can invest in the form of single asset. Basically, you buy a property by yourself, or you could buy an asset with partners. So when you invest with partners, it's typically called a partnership. The next level of investing, a little bit more complicated, is called syndication. When you participate with other investors as passive investors, as limited partners in a deal that is operated by somebody else, called general partner. So you can invest in real estate by participating in a syndication or participating in a partnership. The difference between syndication and a partnership is in a partnership, most partners are active, although there are partners that could be money partners or passive partners, and they're called limited partners, LPs. And then the partners that run the business are called general partners or general partners. So in syndication, general partner runs the asset, runs the value strategy, runs all the work on the property, runs the financials, and so on. Another form of investing in real estate is investing in a fund. REIT is a form of a fund. REITs are well known, they're publicly traded. Their strengths and weaknesses investing in a REIT. There are also plenty of private funds. Many private funds could be more attractive than REITs, and some REITs could be more attractive than private funds. So again, what are the benefits of investing in real estate? So let me just go through some of the basic benefits. Number one, investors in real estate get tax benefits in the form of depreciation. Depreciation is a very powerful benefit. What it does, it allows folks to collect the cash flow and use a pseudo deduction depreciation as a way to mitigate or reduce taxes. So depreciation is very powerful. It's one of the benefits. Another benefits of investing in real estate is appreciation. Appreciation simply means growth of the value of real estate over time. The next benefit of investing in real estate as an equity investor, all these are applicable to equity, is amortization. You can have a mortgage and you can pay down the principal over time, building up more and more equity. You can have amortization in a property. And the next benefit is cash flow. You could buy an asset, get a mortgage, and have some cash flow left over. That is a benefit of investing in real estate. And if you're a lender on a real estate project, one of your benefits would be cash flow. So lenders typically don't get any depreciation, they don't own the asset, but they're a senior position. They record a mortgage or a deed of trust as a lien against the property, and they are ahead of the equity in case there's a problem with the property. So lenders get the cash flow, they get seniority if there's a problem, and they get steady, predictable income, generally speaking. What kind of real estate assets you can invest in? You can invest in residential real estate, example 1, 2, 3, or 4 doors, residential, or you can invest in commercial real estate. So commercial real estate is pretty much everything else other than the residential real estate. It's multifamily assets, it's office buildings, it's industrial, shopping plazas, and some flex buildings, some niche strategies. Land is also considered to be commercial. Land improvements, development, redevelopment, and so on. All these things are generally strategies associated with commercial real estate, although it could be a development of a ground up residential too. So again, this is residential and this commercial. And as far as typically your consideration to invest in real estate, you either invest as your primary residence, a place where you're going to live, or you're going to invest in real estate because it's an investment. You're looking at that as an investment property. So there are multiple strategies in these investments. So far, we covered only kind of the types of investments, the high level, but there are investing in essentially performing real estate, something that is in good shape, good condition, generating good cash flow. And that is investing in properties for existing yield, maybe some growth with the market. There are also different type of projects that are known as a value add projects. In the value add space, you invest in a project that typically needs a good amount of work. It's a repositioning of the asset. Give you an example. Value add project, there are many examples, but the simplest one is you take an existing multifamily asset. The units have not been renovated in 10 to 15 years. They look a little aged, a little old. The rents are kind of low. And as the project executes value add strategy, which typically includes external renovation, siding, roofs, landscaping, clubhouse, common areas, those get improved, as well as internal renovations, where the units get renovated, new appliances, old carpets get removed, new hardwood flooring gets installed, floor plan can be improved, open spaces, bathrooms renovated, and so on and so forth. Those renovations would increase value of the apartment. It'll be more attractive. It'll look like a new product, and the rents could be charged substantially higher. Other value add strategies could be ground up construction. An example of either multifamily or self-storage or industrial. The value add amount of work depends on the strategy. There are value add strategies where you could invest in debt too. You could buy a defaulted note, and foreclose on a property. It's a value add work to actually do the foreclosure. But as a result of that, it enhances the value of your investment. So there are multiple value add strategies. I just want you to understand this point, the difference between kind of performing assets and value add. Value add have typically more risk, but a lot more upside as a result. And one of the big differences, by the way, is just a high level. Folks have asked us, what's the difference between some of the real estate funds that we manage and REITs? Just for simplicity's sake, most of the REITs invest in performing assets. They want good cash flow distributed to their investors. So the REITs typically are steady, eddy, more predictable investments, but their rates of return, the targets are lower than some of the value adds that we invest in. What often happens, we will invest in a value add strategy as part of our funds, and then we will actually exit, sale to a REIT when the price of the property is substantially higher than we acquired it at. So this is the best way to describe what we do versus what REITs do. Is we invest in the value add phase of many of the projects, while REITs typically invest in the performing side of these type of projects. Again, there's a few ways to invest it. Most commercial investments are done with partners through a form of syndications or partnerships, which is very important. They group the capital together, acquire bigger assets, get better economy of scale. As a result, get outsized returns. Once again, real estate is acquired with leverage. A leverage works both ways. It's a beauty and a curse. It's a very powerful mechanism how you can enhance your returns. So leverage typically means when you buy a property as an equity investor or with partners through a syndication or a partnership, you borrow money from a bank in the form of a mortgage. And mortgage can magnify the return substantially because the mortgage could be 6% mortgage, while the average return, annual return on the property, if the property was bought for cash and the value add is executed, could be 15%. So equity gets magnified by having debt on a property that costs less than the equity returns on equity. So leveraging mortgage is a powerful technique, but if the deal doesn't go well, it backfires, then the mortgage could actually foreclose on a property, the lender. and take the asset away, and equity investors could lose money. So you need to understand the pros and cons of real estate investing. It is not risk-free. There's a risk in everything, but risk is much better understood and predicted versus investing in, for example, stocks, in my opinion. Of course, there are different strategies, different operators, different executions, but in generally, one word describes real estate investing in comparison to stock market. Real estate investing is much more predictable. It's a lot easier to predict what's going to happen in real estate versus what's going to happen in a stock market. So as a recap, real estate investing is a very powerful way to grow wealth. Most of the wealth in the United States has been built through real estate investing for reasons that I mentioned. One of them is other people's money, leverage, borrowing cheap money from the banks, investing for growth, executing value-add strategy can substantially enhance rates of return, provide a lot more predictability, provide a lot of tax benefits, and generate a lot more wealth than a stock market. So something to keep in mind. We love doing real estate. This is all we do. We only invest in real estate. It is our passion, but I wanted to share that passion with you. Appreciate your time and attention. Happy to answer future questions. Reach out to us. If you're interested in our funds and syndications, please request PPM, private placement memorandum to accredited investors only. Consult with your attorney and CPA professional, usual disclaimer. Thank you kindly.